Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are pleased to introduce the one and only Mike Alfred to the program. He's an OG in the Bitcoin mining, and finance sectors, and we're going to be exploring all of those topics in today's video. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you thought of today's discussion. If you have any additional questions for Mike and your outlook on the Bitcoin mining stocks in 2025. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, very anticipated. Mike Alfred on the program. He's a value investor, a board director at IREN, and an OG in the Bitcoin and Bitcoin mining space. So Mike, thank you so much for making the time. Welcome to the program.
Yeah, thanks. Thanks for getting me on. I know I'm a little bit overdue to come on, so thanks for staying on top of me.
Hey, no worries. And I'm glad you were able to come on a green day here for the miners. So first question, you've obviously got a long-standing history in this space. Can you tell us when you first heard about Bitcoin and why, or what really made you go down the rabbit hole, so to speak?
Yeah, I think I first heard about it in like 2012, going into 2013, and mostly from like Silicon Valley VCs, because I was running a technology company, a data company at the time, and I'd go to these events in San Francisco, and people would say, well, what do you think the future of money is? And people would say Bitcoin. And unfortunately, I didn't really like those people very much. So like I personally just had little interest in them. And so I discounted Bitcoin at that time. I thought it looked like the dot-com bubble. And so when it went to $1,000 over Thanksgiving in 2013, I was telling all my cousins at Thanksgiving, like, it's going to drop, it's going to go back down. And it did. It went down from 1,000 back down to 200 something. And so that validated my incorrect belief that I understood Bitcoin, which is unfortunate. I wish I had like really dug in and understood what it was fundamentally at that time. Thankfully, I did start to figure it out in 2016, 2017. And I bought my first Bitcoin. I think it was right around $1,500. And then from there, like, added a lot, particularly in the backside of 2018, like in December 18 going into 19, when people were saying it was going to go down a lot lower. So I think it was 2017 that I really started to pay attention. And then by end of 2018, I was not only working in the space, but I was deeply invested in the space again, after kind of more dabbling in 2017 in the first cycle that I participated in. So this is kind of like my third cycle. I think overall, like if I count that 2016, 2017 timeframe, although I wasn't all the way in. But I think, you learn a lot as you watch these cycles progress.
Absolutely. Talk us about your time as the CEO of your company, Digital Assets Data, and the process of what you went through when that was acquired by NYDIG, if you could.
Yeah, sure. So that was my second software company. My first one was called Brightscope. Sold that in 2016. Worked for the acquirer for about a year. During that time frame, my brother Ryan started a crypto hedge fund with two other guys called Distributed Global that ended up going from like $50 million to like $1.5 billion that cycle. So they did really well. And they approached me and they said, hey, like, we think there could be like another data business like Brightscope in the crypto space. Like, think of it like a Bloomberg, right? Or, a Morningstar or something like that for crypto. And so I raised money right away, like with their help and their backing. I was able to get Alan Howard, the billionaire hedge fund manager from Europe, as the first investor. I got Glenn Hutchins, the co-founder of Silver Lake, as one of the other large investors. His son sat on the board. And then I went and like shook the trees and got like all the big crypto investors in there, right? So I had got like Barry Silbert at DCG and Mike Novogratz at Galaxy, and I got Jump Capital, right? And I got a whole bunch of people from the space invested. We went out and we built a platform, like a Python-based platform to manipulate crypto data. We were running nodes on like 20 or 30 different blockchains, right? Redundant nodes to suck down all the transaction data. And then we were, obviously trying to sniff out all the transactions on all the exchanges, put that into a big data warehouse, and then we were helping people build models, do analytics, right? Predictive work, et cetera. We even got to work with Paul Tudor Jones for a bit. We were providing data directly to him on analysis on Bitcoin holder behavior. So it's an interesting area. And we had Jump as a client, right? We had Paul Tudor Jones as a client. We had Paradigm and Polychain and Pantera and some of the biggest names in the crypto ecosystem, but it just was a business that struggled to scale. And I think part of that is, half the hedge funds that were around in crypto at the beginning of 2018 were gone by the end of 2018 during that bear market. Also, a lot of those firms transitioned from liquid token investors to VC investors. And so data is less valuable in some context there. And it's just hard to scale. It's hard to sell products for 50 or 100K a year to that many people in the ecosystem. And so I saw the opportunity to exit as the bull market was starting, my second cycle, the 2020 to 2021 bull market was starting to take off. And we managed to get the company sold, I think, the day before Thanksgiving in 2020. It wasn't announced until early 21, but the deal was actually done the day before Thanksgiving. So I had a good Thanksgiving that year. It wasn't a great outcome financially, but the important thing was we landed more than half the employees in a good place. We got most of the investors' money back through that process. And, I started working as head of strategy and M&A at NYDIG. And under my own kind of direction, I kind of pulled the focus into Bitcoin mining. It just seemed like an area with a lot of promise, and it dovetailed nicely with what NYDIG was already doing on kind of the Bitcoin brokerage and Bitcoin lending side. And we just did a bunch of deals, right? I led the Luxor Series A. That was a deal I actually brought in there. We did the Genesis Digital Assets financing back when the valuation was much lower. And we did the Arctos Capital transaction, which brought ASIC lending inside of NYDIG. And so we kind of reshaped at least one of the focus areas of the company. And of course, now I think from what I can tell from the outside, NYDIG is really beefed up its direct mining exposure partially via foreclosing on the ASICs from the last round of loans that didn't perform very well, and then partially from just direct equity investing and getting involved in the companies, buying sites, et cetera. So I feel good about that because if NYDIG ultimately goes public, right, or gets acquired at some point, and the mining is an important part of that story, I'll definitely raise my hand and say, okay, I was definitely a part of that whole experience. And I think what was interesting about it is I hired an analyst from Blackstone, and we just surveyed the whole market. And so I talked to maybe 40 or 50 mining companies, public and private, including all the ones that you kind of know now, and some of the ones that have been acquired, right, et cetera. And so we talked to all those guys over the course of 3 or 4 months and talked about equity, talked about debt. It's how I got to know the IREN guys, right, et cetera. Was, of course, when you're bringing them money, they want to talk to you. But importantly, also you bring your expertise and your knowledge. Having talked to all the other miners, I was able to give, in some of those conversations, some good insight into how other people were viewing the market, how we were viewing it strategically, where the opportunities are to get leverage from a capital standpoint. And so I think as part of that, when I ended up leaving NYDIG not too long after that, Dan reached out and said, hey, we've talked to a lot of people over the previous, few years since we started the company, and you've definitely been one of the more helpful people, and we like your insights. We like your, your perspective. What do you think about, joining the board as we're thinking about shifting somebody out and remaking the board just a little bit before we go public? And timing was great, right? Because they were coming to be just months before the IPO, and, JP Morgan was going to take them out. And so it's been almost 4 years now. It's been over 3 years, between 3 and 4 years, and it's been a wild ride, working with those guys. But it all started from the NYDIG side.
It's uncanny because when he approached you, I mean, I think when the IPO, he approached me, and I think it was retail investors were sending him a note saying you need to get in touch with Anthony. He does this analysis on Twitter, and he does the mining companies. And he reached out, and we had a conversation. He said, "Look, we've just IPO. We've got, I think at the time we had half an exahash of hash rate, with obviously plans to grow." And I said, "Look, Dan, if you send me the data through monthly, I'll put you in, no problem." And so, I've been covering IREN from the very start. I mean, I know there's a lot of what I call the Johnny come latelys in the social media front now are flying the flag. But 3 years ago, when nobody was doing it, I was out there, putting IREN. And actually, if you go back, I mean, you've probably seen some of my tables, and we've chatted on Spaces many times. But the tables are the tables. I can't make the numbers up. The numbers are there in the earnings reports and the updates. And so people say, "Oh, you're constantly having IREN as in the top." That's the way the numbers fall. I can't change. They're providing the numbers. If they're lying, that's their issue. But they're going through SEC documentation. So, yeah, no, it's been a good 3 years. You mentioned Paul Tudor Jones. I mean, I always like listening to him on CNBC, and I got into the space probably about the time of that Thanksgiving what you were referring to there. I think it was about November 2020 when I purchased my first mining stock, which was Marathon Digital. And Paul Tudor Jones, I listened to him on CNBC and listened to the conversations when they were they just weren't getting it. The presenters on there weren't getting Bitcoin at all. And I sort of stopped watching it for a few years. And then I think last year I started occasionally just switch on again. And it was the same conversation. They're asking the same questions they were 3 years ago. It's as if everyone else has moved on, but these presenters sort of still look at each other. And then I saw something with Jim Cramer the other day. Oh, I've got Bitcoin. I mean, he sold it he sold it through the bear market in 2022, saying don't touch it, it's a scam. And now he's like, all of a sudden, because it's doing really well, he's back in the mix. I sometimes don't quite get what they're trying to achieve. They must understand. They're not stupid people on that program.
I was going to ask, Mike, you've been around now 3 cycles, and as Anthony says, the investment climate, especially the mainstream investment climate, has changed a lot with Bitcoin. So my question to you is, with the implementation of the ETFs, Trump's administration, the strategic Bitcoin reserve, do you feel like this cycle is fundamentally different than the other 2 you've been through?
Yeah, I mean, absolutely. It's an institutionally driven cycle, and that's part of why Bitcoin has sucked a lot of the air out of the room in terms of altcoins. There's, of course, been a few small rallies and some meme coin stuff, but this is an institutional driven market. Very few institutions are interested in anything other than Bitcoin. When they are, it's been Ethereum, maybe a little bit, and then maybe a little bit of Solana. And that's sort of it in terms of large scale demand. And so it's concentrated things a bit, the focus on Bitcoin, and the retail has largely been uninterested. Even at 100K, I think a lot of us thought 100K would be a trigger point for bringing in more retail, but search traffic hasn't really risen. There's sort of a general apathy towards the sector, which I think paradoxically is quite bullish. Because from a positioning and sentiment standpoint, you love to see Bitcoin doing these very constructive moves higher and consolidating with very little euphoria. And so I think it's a different cycle. I think it could be elongated. That's kind of been my view for a couple of years now, that people may think the cycle will turn down on the same timeline as previous cycles, and it may actually run further out. And I think part of that is, on the Bitcoin side at least, is that Bitcoin is converged with AI at the energy layer. Such that the people providing the compute for Bitcoin are also providing compute for AI, and that may stretch out from a longevity standpoint the cycle, because you still have a ton of capex being deployed right now, and you have capex coming in from third parties, like we just saw yesterday with the announcement after hours with not Stargate but SoftBank, which is essentially Stargate at this point, buying $50 million of Cypher in a pipe. At whatever it was, 480 a share. That capital didn't exist at all for the Bitcoin sector last time. And I think that's just the tip of the iceberg, relative to what might be coming over the next 12 months. If that continues and actually grows, then you could actually see so-called Bitcoin miners running all the way out into 26 or even 27, which will probably stretch out the Bitcoin cycle, right? Because if you have a bunch of so-called Bitcoin miners generating revenue from AI, that's stickier dollar-denominated revenue that doesn't fall when Bitcoin falls, then it's less sensitive to the just pure commodity price. Also, you'll have less people selling Bitcoin because everybody's following the MicroStrategy model, where they're borrowing using convertible notes and doing whatever they can to not sell their daily production. A lot of the firms, right? And so I think people may be surprised, right? We may only be in the third or fourth inning now. And if that's the case, then like a lot of the biggest moves and a lot of the excitement about the sector is still ahead of us. And I think that's already different from a time perspective. By this point in the last cycle, you knew that you were in a bull market. In fact, like the mining bull market was almost over already last cycle. So like we're either wrong, all of us, about the value of large scale infrastructure, which I'm 99.8% certain is an incorrect view, or if we're right, then we're still very early in that upcycle. So I expect that a lot of people will be surprised by that. And I agree the ETF is one of the key drivers, right? Because you've got this really sticky capital that comes in and doesn't go out quickly. You've got wealth management in the US. You've got gap accounting standards changing, right? That's going to allow people to mark up the value of the Bitcoin as it appreciates. So many factors at play. There's no reason to be bearish, I guess, is what I'd say at this point.
Awesome. Hey, Anthony, I'll let you follow up on that in a second because you've actually been saying you predict that this may be an elongated cycle with minimized drawdowns as well. But one thing you mentioned there, Mike, I wanted to pick up on, you mentioned Stargate. So obviously that was the big investment announcement from Trump. Shortly after that, we had the DeepSeek news come out on Monday this week. So I wanted to get your take on that as someone who's intimately involved with the infrastructure, the power pipelines, the AI HPC world. Do you think DeepSeek is as big of concern as people made it out to feel like?
No. Yeah, I don't look. I tend to. I've always believed this, right? But that efficiency and technology just drives more utility, which then ultimately drives more usage. It's the whole Jevons paradox thing that people have been parroting about. But anyone who's followed technology for 25 years, right, invested in technology companies, has seen that over and over again. So to me, it was just a buying opportunity. What I did the morning that happened, right, where everything was selling off, I put GE Vernova, Vistra, Constellation Energy Group, Vertiv, and a handful of other Arista, like anyone who is playing that broader data center theme, I put them at the top of my watch list. And exactly what I thought happened would happen. Like by the end of the day, Monday, the money was flowing into them. By after hours Monday, they had already popped, almost all of those names had popped 6%. And a bunch of them, these are utilities, right? Like they're up like 30% in the last 3 days, right? And so the market has spoken already. Like anybody who's still talking about DeepSeek as if it's like some severe thing that's going to affect the market for a long time, like clearly is not a market-driven person. They're like a fanatic and they like to read the news. That's not what I do. Like I focus on what is the market saying about what's happening. The market has already sort of opined on this. So we're going a lot higher, right? Like the AI demand is just going to get bigger. And I think if anything, this little DeepSeek kerfuffle brought in a lot more people, brought in a lot more eyeballs, brought in a lot more attention. And I think it's forced the big players that are really committed to the space, like Zuckerberg, right, and Satya Nadella at Microsoft, and Sam Altman and Larry Ellison at Oracle. It's forced them to go back and Masayoshi Son and like all these people from traditional tech that are invested in AI. They have had to go back and reaffirm their thesis. They've had to go back to the drawing board and think about it harder and come back out. And they spent a couple of days on it. And they came back out and said, nope, we're investing just as much. In fact, we might even accelerate our investment because this tells us how competitive the space is. So I think it's all bullish. I think if you were paying attention on Monday, on Tuesday, you could buy Core Scientific at like 1050. Right, you could buy Cypher it dropped down to $4.10. I mean, it literally was $6.20 on the Friday before that, and it was back there this morning, right? So a round trip from
Yes.
640 to 410 to 620 in
Yes.
4 or 5 trading. It is wild volatility, but it speaks to, I think, the wide dispersion between what the market expects and what's possible, right? So like there's all these potential outcomes in the future. And I think most people are skewed too far to the left in terms of like what they think the possible outcomes are. And the more you have these really, really big outcomes, like, who knows, maybe Cypher, they sell the whole site to SoftBank. Maybe SoftBank tries to buy the whole company. Maybe they end up doing like an investment program across all of their sites that integrates Stargate into who knows. But I just don't think the market at $4.10 or $4.50, a couple of days ago was like really thinking about that. It's just fear-based. it's short-termism, right? It's like whatever the headlines are saying, and I think people are going to regret trading on some of that stuff. Like I think within the next year, it's going to be very obvious that that was penny wise, pound foolish.
Yeah, one of the, yeah, I mean, you mentioned, about cycles, and we'd be remiss if we didn't talk about the strategic reserve announcements, and your good friend and our friend Dennis, who with Satoshi Action Fund's been doing some stellar work in this space over the last few years. We now, I think, at the last count, it was 11 or 12 states are already starting processing this. We've got obviously we've now got the chair of the Digital Assets Committee fully focused on delivering a strategic Bitcoin reserve at Congress level. And then yet we have an announcement today from Europe. I think Christine Lagarde said that the European banks aren't going to be following this suit. They're not interested. She's had a discussion with the Czech Republic people to say, then the rest of Europe aren't following this. I mean, living in the UK, it sort of baffles me sometimes when you consider we'd like to consider ourselves at the forefront of technology, but in terms of Bitcoin, it was so far behind the curve. I mean, in the UK, you can't even can't even buy crypto from some of the banks. You can't even move money from banks to exchanges. That's how bad it is over here for for certain aspects. But in terms of the strategic reserve, I mean, are we talking game changing here with regards to a cycle? Then, I mean, we can't, if that happens, we'd probably, with that level of adoption, do you see us being more stabilized going forward?
I think the train's left the station, and I don't think it even matters like what exactly happens or when it happens. But the important thing is that every government in the world is having to have this conversation, and there's some game theory going on now around who's going to get there first, right? You're seeing the Czech
Yeah.
banker the other day saying they may do something, right? The Russians are talking about this, the Chinese are talking about
Chinese.
this, et cetera. So like, look, nobody knows, and I don't even think it's worthwhile to speculate too much on exactly how that plays out. The only thing that I look at is sort of signpost along the road. Like I view it as waypoints in the snow, right? It's snowing, the road's covered, but you see these flags going down out in the future. And so I just watch the general direction of those waypoints, and I spend less time trying to make perfect predictions. Although, of course, a sport on Twitter, I like to throw out stuff like from time to time. It's good fun, but in terms of like professional focus, like no, I don't have like a view on exactly how that plays out. I do think in the next 6 to 9 months something will happen at the U.S. government level, and maybe not even driven by Trump, maybe driven more by Lummis, or maybe driven by this committee he's put together. But I don't listen. Like I think people should not worry too much about what they're saying right now. They should just look at what Donald Trump's team is doing. They're buying
Yeah.
Ethereum and they're buying Bitcoin, and right,
Yeah.
I think if you're long Bitcoin and Ethereum, it shouldn't matter so much exactly how it plays out. Your position with the president's money, and the president cares more about his money and himself than anything else, right? So like I voted for him, but I'm aware that he's a very extremely self-interested person. And so anyway, you want to align yourself with that, irrespective of like how exactly it plays out. I think even without a strategic Bitcoin reserve, we're headed to 200,000 Bitcoin sort of as a minimum this cycle, just because of all the other factors, right? Like the demand for Bitcoin is far exceeding the daily supply. We're at 450 a day, right? 450 Bitcoin a day, and that's mostly being soaked up just by the ETFs and
Well,
and
most of the miners aren't selling, Mike. So the supply of Bitcoin for sale is obviously shrinking quickly. I mean,
Mhm.
Michael Saylor and the ETFs have been eating up Bitcoin at the rate of literally 20 days production on some days this year with their buying. And go back a year ago, a lot of the miners were selling Bitcoin, but now there's only three, I think three or maybe four miners that are selling on a more regular basis. Most of the rest of them now are trying to build a HODL. We've seen even the likes of Core Scientific, Bitdeer are starting to HODL their Bitcoin. Now they're in a position where they've got funding coming from other avenues to actually manage, their growth on. So it's there's a small percentage of daily production being sold, but it doesn't cover the thirst of the ETFs or Sailor or other entities that start coming into this space.
Yeah, and I
Yeah.
think the tricky thing and the thing that confuses people is you could do the math and you can see there's a supply demand imbalance. But just like in previous cycles, it takes a while for that to actually play out in terms of market prices. There's a tremendous lag there, and some of that has to do with institutional games that are being played with futures and options, right, and market makers trying to execute certain things, right, and so you see that and you think, oh, like something's broken, something's wrong. I've heard that a million times, right, over the last 5, 6 years. Like every cycle, people are like, if everything's so good, why isn't it up? And then you blink and you look back at 3 months and it's up. And I think we're in that kind of key moment right now where it's clear there's a massive supply demand imbalance. The price does not reflect it yet. It's not priced in fully. And I think there'll be a moment or a series of moments where they're quite cataclysmic where they get priced in. And I think that's across the tokens and again, Bitcoin as the kind of key asset in the space, but also the derivatives and the proxies. And I think that you put the miners in there because the miners are most compressed this cycle. MicroStrategy is already like reflecting higher prices in Bitcoin, and it was doing that in November. I think in November it was saying Bitcoin's already at 150K. I think a lot of people are going to be surprised when Bitcoin goes to 150K and MicroStrategy doesn't do exactly what they expected, and the miners actually do what they did last cycle for some period of time and completely throws people off because, again, most people in this space are kind of looking at their shoelaces and looking at performance yesterday. They don't really have a fundamental view. So they're really excited about whatever went up yesterday, last week, last month, but they can't really predict very well what's going to happen in the future. So I think, look, I think that supply demand imbalance gets rectified over the next quarter or two, and we get to like 150 or 180K Bitcoin. I think in that window, you actually see convexity in the miners, right? That we haven't seen. A lot of people will be like, well, how come they didn't go up a lot between 80 and 100 or between 60 and 80? And my argument this whole cycle has been, look, there's a rebasing of pricing that has to happen post-halving just to get back to something that looks and feels like previous profitability regime. So now we're back at like a reasonable level where nobody's losing a ton of money, but we're not at the, wow, this is a bonanza moment where like the oil's coming out right of the spigot. That's still to come, and it will come at 120 or 150K Bitcoin, because the thing that people have really forgotten in this whole sector is that when the spread between the cost to mine and the market price gets wide enough, that's where all the profits are in mining, and that period of time comes up on you really quick, and it doesn't last very long. But when it does, the equities get completely repriced. And so you've got a bunch of people who like don't understand that, who were maybe a little too early or a little too late, whatever. And then they all jumped ship to MicroStrategy, over the last 6 to 9 to 12 months. And now they all think they're so smart. Like, oh, of course, MicroStrategy is the best proxy. It's going to do better. And I think it's going to wildly underperform the miners over the next kind of 50 or 100K move in Bitcoin's price. And it's just math, right? Because you don't want to be buying Bitcoin using debt at 200K or 250K, but literally that's the business model of these HODL companies. Their business model is to buy more Bitcoin, the higher it goes up, and raise their cost basis such that the next time Bitcoin falls 50, 60, 70%, they're going to be underwater. And if you're mining Bitcoin at scale, like IREN is at 30K, and Bitcoin goes to 180K, you will see power in that equity again. You will see convexity. You will see substantial returns, in my opinion, right? And so that's what I'm focused on, right? I've stayed focused on it. A lot of people get whipsawed in this space, and it's understandable. It's really, really hard to hold these equities when they go down on you 50% 3 times in a bull market. But eventually, you do get rewarded in this space if you're right about the full cycle.
Most definitely. Hey, I want to dig into the miners a little bit here with a few questions, Mike. So you brought up the different strategies out there, MicroStrategy, purchasing Bitcoin, miners creating it. I put a tweet out, I think on the 11th of December, predicting miners would outperform MicroStrategy for the remainder of the cycle as well. So Anthony and I are very aligned with your thoughts and conviction there. I wanted to get your opinion on HODL versus no HODL, and now the miners that are actually purchasing Bitcoin. Do you think that's the right strategy, or how do you think that will result for these miners?
There's an incredible nuance there, right? Because the right strategy for one company is not necessarily the right strategy for another. I try to think of it from the board perspective, right? From a governance standpoint, like if you drop me onto the board, what would I do? And each one of those companies, I might do a slightly different thing. I think IREN strategy is pristine for IREN because IREN has probably the best set of physical infrastructure in the entire sector globally. And so it makes zero sense if the one area you're actually going to win on long term is have better infrastructure so that you can generate new Bitcoin at a really low cost with high efficiency and high uptime, et cetera. It makes no sense to use $1 of capital and put it into an asset that everybody else holds. Where's the differentiation? Where's the unique value proposition you're offering investors if you're just doing the same thing that MicroStrategy is doing, but just smaller? That said, if I didn't have the world's best infrastructure and that wasn't a path that I could actually compete on, I would of course do what the companies are doing that are buying Bitcoin, because you're still differentiated from 99.99% of other companies outside of Bitcoin who don't have any Bitcoin on their balance sheet, and you may beat them from an equity performance simply by, hyper Bitcoinizing your balance sheet more quickly. So again, I am not going to comment on any particular company. But I personally have chosen to invest more heavily in the companies that I think can actually deliver the unique value prop that a miner should be able to deliver, which is to be able to actually mine Bitcoin well below the market price as we get to higher Bitcoin prices. That's the only reason to invest in this space, in my opinion. Like if you're not going to invest in this space for that reason, in my view, you should just buy MicroStrategy. Right? I don't see the point in buying a second or third tier miner who can't keep their machines online, can't compete, can't keep their efficiency low, right? Doesn't have good infrastructure. I don't see the point of buying that for their HODL. I'd rather just buy Bitcoin directly, buy MicroStrategy, and then buy a handful of the very best operators who can actually generate that unique value prop.
Sure. Now you talk about the infrastructure specifically with IREN. Obviously, they've really come out this year as a leader in the space. We've now seen Trump talk about being the crypto capital of the world, Bitcoin mined in America. So can you talk to us a little bit about the importance not only of that infrastructure platform, but where it's located in the world now, specifically as Trump looks to onshore a lot of the production?
Yeah, I think you guys probably know this from my spaces, but over the last 2 years, I've specifically called out companies who invest too much internationally, particularly like the companies who invested in bad domiciles, places in South America, et cetera, where like you just are not going to get the results you expect to get. I think it's become more clear that Texas is probably the best jurisdiction in the world to mine in part for cultural reasons, right? Because it's an environment where you're unlikely to be disrupted fundamentally. You're unlikely to be told you have to just stop mining, which is possible in almost every other jurisdiction, including other US states that are more left-leaning. But also because it's a true deregulated energy market with a grid that has a bunch of renewables on it, particularly in the Panhandle in West Texas, where when IREN came into the market, there was 20 gigs of excess wind and solar power that had no way to be transported down to the load centers. So it was mostly just wasted, right? There's no battery technology to store it. And so you've got this beautiful opportunity to soak up power in areas where the land was really cheap. There was nobody there. No one cared about it. And you're providing a service to the grid, right? You're making the grid more anti-fragile because you've created a new kind of base demand level, base cost level during 95 or 98% of the time when there's no spikes in demand. And then when, as you guys know, when demand spikes, you could curtail 100% of your production. So you need a market that looks and feels like Texas in order to do that. Like you can't, some of these other markets, they're decent markets like in the Southeast, but they're more regulated markets, right? The pricing is going to be higher. Your ability to curtail is going to be different. The reasons you'll curtail will be different. Canada also has tariff and tax related issues, possible forced curtailment in some geographies over time. South America has been a disaster. I won't go there. Kazakhstan's been a disaster. China's been a disaster. Russia is a disaster in the making. Northern Europe has been a tough place, right? Like Northern Data tried to mine there, and I think they just found it like it's really challenging from a regulatory standpoint. And so my personal view and where I've focused for the last 2 years is miners that are really hyper focused on the best geographies in North America and in particular in Texas. And I think that as that thesis is playing out in my direction. And I think, again, the other argument that people made recently is you won't be able to do AI there. It's too far from the, from the users, right, et cetera. And I think everything you're seeing from OpenAI, Oracle, SoftBank, et cetera, is saying that, no, that's not true. Like they're seeing the same thing we were seeing 2 or 3 years ago. And so I think the money's coming to us, right? I think the investment's coming to Texas, and I think there's still a lot of opportunity in Texas. The challenge, though, as you guys know, is it's taking 5, 6, 7 years to get on the network now if you're starting from a standing start. And so the people who had foresight a year ago, 2 years ago, and went out and acquired these large scale sites almost like options, are now finally going to get paid. And again, I don't think that's reflected in the equity prices. Like I'm looking at the screen, I don't think Cipher's equity price fully reflects the value of their sites. I don't think IREN's share price definitely does not reflect the value of those sites. And the market will speak eventually on that, but that's my view. I think people should be focused in the best geographies, particularly in the US.
In terms of going forward, we're talking about the Bitcoin price potentially getting 150, 200,000, but yet we're seeing the miners are pivoting more towards the HPC, the predictability of revenues, no volatility in that market segment. How do you see the Bitcoin mining industry, over this sort of like next couple of years, with some of the bigger companies saying we're not increasing our hash rate anymore now, we're going to use our power to pivot towards HPC. Even the likes of IREN have got sites that they can develop, and the sort of the communication that's coming out is suggesting more HPC orientated rather than Bitcoin mining. Yes, we've got some targets this year to achieve, but we've not got some longer term targets that we were sort of like seeing last year, which miners achieved last year as well.
Yeah, I mean, look, Core Scientific opened Pandora's box and showed people like what you can do in this sector. And so it triggered like a radical rethinking of the entire sector in terms of the latent optionality you have in this infrastructure. I think that's all healthy. I don't think there's any negativity at all. That in fact it's all positive, right? Because the more that you can prove that there's real value to this infrastructure beyond the economics in that moment of mining Bitcoin, the more you can justify more CapEx exposure overall to the space, more investment. And it brings in a different group of investors. There's a whole group of investors, and this is what Core Scientific and TeraWulf and some of these guys are playing to really well. It's this whole investor demographic that has no interest in Bitcoin, not because they're right necessarily about where Bitcoin's going, but because they just don't understand it. They don't like it. They think it's a commodity business. They think Bitcoin's too volatile, whatever. But they love selling, AI compute. They think it's stickier, right? They think it's dollar denominated, et cetera. I think in the long run, it's possible Bitcoin mining, like over 5 or 10 years, like dramatically outstrips AI compute provisioning in terms of its actual like net economics. It's possible, right? The jury's still out. We don't know how commoditized AI is going to get, and we also don't know how high the Bitcoin price is going to go. But what is happening, the more you splinter the available power, and again, if we focus on power as the key gating factor, not chips, because we know you can get more ASICs, we know you can get more GPUs, right? And while they're not infinite, there is some like finite limit to it. The power market is like there's like a physical reality of like how much power you can get online in the short term. And so if you splinter that power from the current crop of Bitcoin miners who have secured a big chunk of that, especially like they punch heavier than their weight, right? Like in terms of their market caps, like the $30 billion market cap for the sector, but they control more power than like much bigger industries from a market cap standpoint. And so if you splinter that and you start to devote some of it, which I think is the right strategy, by the way, I don't think you want to be all in AI because I think that's going to go through boom bust cycles, right? And then it wouldn't be all in on Bitcoin mining only because then you're totally at the hostage of the Bitcoin price. And so I think if you can blend it out, which is what people are doing, then you create more predictability in revenue. You're going to get higher multiples on the stocks. So I'm not a proponent of going all in either direction. What I'm a proponent of is to figure out the right balance between these different revenue streams so you can build a real sustainable business that actually generates shareholder returns. And I think people have figured that out. And the people who are pushing that right now are diverting power away from Bitcoin mining, which is wonderful for the people who continue to mine Bitcoin, right? So I think the hash price like is going to go up pretty substantially over the next year. Like if you look at the CapEx is so lumpy in this space, like so much hash was deployed in like the back half of last year. there's much less scheduled to come on. That's going to slow down at the midpoint of this year, right at the time where Bitcoin should also be at higher prices. And so I think there's going to be a moment in time where people forget how bad it was in Bitcoin mining over the last 2.5 years, like how rough it was and how challenging it was. And they're going to be like, wow, this is such a good business. And it's actually going to be back in the conversation with some investors with like, how do you decide whether to do Bitcoin mining versus AI? What the conversation now with most large investors, like the hedge funds, is just how do we get you completely out of Bitcoin mining into AI?
Yeah.
Right. Like that's it. They're like one dimensional on this. And I think that's going to be not the right view. Like in 6 or 9 months, the right question is going to be what's the right mix of those two revenue sources. But you got to prove it to those guys. They want to see the number on the screen. There's no vision involved, right? They don't have a view necessarily on Bitcoin. If they have a view on Bitcoin, it's that it's too high, right? And so like you're not going to invest in a producer business, like a commodity production business, in a sector where you don't believe in the commodity. So I get that, but I think within a short period of time here, it's going to be clear that the right strategy is to do both and oscillate between them whenever the relative economics are better.
And in terms of, I mean, what we've seen last year, we had a halving in April last year, but equally as important, we saw the global hash rate rally from about 500 at the start of the year all the way to 800. I think today's 7-day average is about 780. So suggesting around about, the 800, and it's actually peaked at, close to 1,000. I mean, do you see that as an issue for miners as well? Because we've had this chat before about, when is this this is just seems to be relentless. We're looking at what the hash rate could be at the end of 2025. And I suggested because of the HPC maybe move from some miners to move into that space, it may get to 1,000, but not as high as some of the other forecasts that have come out and said 1,200 maybe. But what are your thoughts on sort of like a global hash rate and the impact to Bitcoin miners?
It's going to keep going up. And part of that is the machines are just getting so damn good that you don't even need that much power to generate a lot of hash. And so that's good, right? Like all things being equal, not thinking about it from the mining equity perspective for a second, but just all things being equal, if you're bullish on Bitcoin, you want to see that hash rate just march higher forever, right? So like you want to march higher, but what you want is for periods of time for the Bitcoin price appreciation to dramatically outstrip that. And that's what it's done historically. So far this cycle, we've had basically a 6.5 x, 7x, right, off the bottom. So like that's pretty good for the Bitcoin price, but the hash rate has gone up similarly. I think those things will become untethered this year. That's why you're in this business, is for those moments where those things become decoupled. And so like you could see Bitcoin doubling this year and hash rate only goes up 20 or 30%. Now all of a sudden you're in a golden era for mining again. And some of the power is going to get pushed away to AI too. So you're going to have less push on the hash rate because of that. So nobody knows for sure, but what I can say with a high degree of confidence that the mining economics will improve a lot before they get bad again. And so you want to mine while the sun's shining, right? And then you want to be careful about getting overextended. And I think if you look at past cycles, the thing to watch out for is people who issue a ton of convertible notes when Bitcoin's at 150, 200K, 250, right? People who take on a lot of debt to buy machines or buy sites late cycle. I think if you did it early cycle, you're safe, right? Or if you're cautious about like how you stack those convertible notes, et cetera. But I think the people who get too crazy with it at the end of the cycle are going to pay a heavy price, just as they always do.
Yeah. In terms of 2021, when we went through that bull cycle, we also went through a bull cycle in terms of machine prices. We haven't really seen that. I mean, a lot of miners in 2024 managed to get in really early. Clean Spark, IREN, Riot, Marathon were all buying significant amounts of hash rate, all sort of like the latest machines at what I would say, really good prices. And we're seeing miners even now in the last few weeks coming out with similar deals, sort of 6 months later. The Bitcoin price has rallied, but we haven't seen that growth in the machine prices that we've seen previously. Do you expect any correlation between machine price and Bitcoin price as we go forward?
Yeah, they will go up. But what you have right now is you have like 5 or 10 big public miners who have ATMs, unlike the private miners who have, you've seen their share of the hash rates grown quite dramatically because they're able to raise during the dark parts of the bear market. And so you've got firms like CleanSpark and IREN and Mara and others who are the primary customers for Bitmain and Canaan and MicroBT. And so they have a lot of clout with them, right? Those businesses only survive if these miners, who are the only people, by the way, who could do those big deals a year or 2 years ago when no one had money. And so they all got options, right? And they all have like preferred status, like preferred customer status in a sense, right? And so everybody got options, and no one wants to overpay because everybody learned the lesson of the last cycle. So the machine prices will drift higher, but I don't think we'll see the euphoria we saw last cycle. And part of that is, again, a lot of the investors are pushing from the board level and from a governance standpoint for people to be more cautious, and for people to consider alternative uses of that data center capacity. And so I think the combination of those things, at least as long as the hash price is where it is, you won't see a big spike in the machine prices unless you see a big spike in the hash price. And I do think we'll see a steady upward movement this year in the hash price. It's not going to be dramatic enough, in my opinion, that we'll see like the spike in the machine prices to like 5x or something, right? Like we've seen in previous cycles where they run up 5x. I don't see that happening. It could be wrong. But I think if you want to get hash online, it's been a great year or two because the prices have been sort of like held down at a really low level because a lot of people just have a view that mining's not going to be a good business anymore.
In terms of 2024, probably one of the surprise companies that did really well was Bitdeer. And they came from literally nowhere. I mean, I think a year ago they had like one analyst following them. Now they've got 11 or 12 of the big analyst firms covering them. They come out with a load of unique updates in terms of the fact that they're obviously starting to, build their own machines, which when you think isn't a total surprise, having Bitdeer formed out of Bitmain 3 or 4 years ago. But how do you see sort of like that as an entrance to the market there, and what they're doing in sort of like mining HPC space? Do you see a solid business platform there? Has the market got it right? I mean, at the moment, I think only Riot and Marathon Digital have got a higher market cap than Bitdeer in the sort of North American miners.
Yeah, it's a tough one for me because I'm so focused on risk mitigation, and I don't know who's like driving things, who's making decisions there. Like I don't know the board, I don't know the founder, right? And I've talked to the US based employees. Like I really like the chief strategy officer. She's a really smart guy. Like it seems like the chip that they're developing is promising, but I can't get there personally from, even though I watched the stock and wanted to trade it, right? Like I actually told the guy who runs their IR there, I told him at the conference in September in New York, the HC Wainwright conference, at the first night event, I leaned over to him. His stock was at like $5-6. I said, "Your stock's not going to be at $5-6." Very much like he was kind of depressed. I'm like, "Don't be depressed. Your stock's going to bounce." I was wrong about how much I thought it would go up, like double or triple, and it basically went up 5x.
Yeah, it was really
just a few months. And they got Tether in there and all that. So like, look, my whole view on this space is you can make money doing a lot of things. There are a lot of like swings in investing that I don't take, even though I look at them and I'm like, I bet someone's going to make a lot of money on that. But for my investment strategy, it's very much like risk mitigated. It's like very much focused on not losing money as opposed to making a lot of money. And so even though I can see a path to making a lot of money in Bitdeer, I don't like cataclysmic or catastrophic potential risk. And I see that with any company where I can't understand the governance. It's an issue that came up with me with Bitfarms as well, where like I looked at the production, I looked at the efficiency. When Jeff Morphy was there, right? Like I had multiple meetings with management. I really liked it, but I couldn't get behind this sort of what I viewed as somewhat reckless over investing in South America, and a board that didn't seem to be truly independent to me. It seemed like a bunch of guys who were kind of insiders in South America who kind of controlled things, and I wasn't sure that was going to work out so well for the Canadian contingent. And so that concern, which a lot of people thought was ill-founded and incorrect, and Mike doesn't know what he's talking about, has translated into like basically a disaster for shareholders this cycle. It's like one of the worst performers in the group. And it actually, at one point, like in December 23, it actually looked like it could be one of the better performers, but the last year has sort of proven that to be true. And so my view on these things is like, you try to strip out like as many of the risk factors as you can. And even though you'll miss some of the things that go up that you're not in, like over an investing career, 10, 20, 30 years, by missing a lot of the zeros and a lot of the blow ups and a lot of like the really bad outcomes, you end up posting really good returns. So
Yes, I mean, we've got Ben on next week on the podcast, but their move away from Paraguay, maybe supports your argument as to why miners operate in South America. But equally, we had Frank Holmes and Aidan on yesterday with Hive having purchased that site from Bitfarms, and they're going literally chips all in on Paraguay. So they'll have about 18 exahash operating there by September this year. So they must see something that you're not seeing and other people aren't seeing in the same space.
This is such an odd space, right? Like Riot went activist on Bitfarms. Bitfarms bought Stronghold, and Bitfarms is selling a site to Hive. And there's all these things, which are all to me, every one of those things I just mentioned was very funky to me when I do my analysis. Like none of it makes sense. Like Stronghold, I really like Greg Beard, really great guy. But they couldn't make that site work. Why is Bitfarms going to be able to make that site? Bitfarms couldn't make their Paraguay site work. Well, how is Hive going to make that work? Nobody could make Bitfarms work, but Riot's going to make it work. Riot can't get their Corsicana site online, and they can't keep their machines on. So it's like this cascade of like things that haven't turned out the way people expected. And I think people think if they do more deals, right, they do more M&A and they do more movement and more action or whatever, it's going to change the outcome. And for my money, like in my investment, I prefer companies with a very clean operational platform that they own and control, that they can deliver the results. And I've said this for 2 years in spaces, right? Like since I started doing spaces about mining like 2.5 years ago, I said, look, I'm focused on the operational leaders, which I thought was Bitfarms, right, at the beginning of the cycle. But I became disillusioned with that as I started to see some of the drama, and the drama at the corporate level, right, at the board level, actually did translate down, because they said they were going to hit 20 exahash and they didn't get anywhere near that. Contrast that with companies like IREN that nobody believed their forecast because it was so big. They're like, how is this little company going to hit 20 or 30 exahash? And they hit it.
I think we've got about 20 podcasts where we said IREN are going to hit their 30. It was 30 exahash and they went above 30 exahash. But we said at the time, we actually felt IREN and Riot on the grounds that filling your one site with Hashrate was a far easier challenge than 11 or 12 sites, growing them to get there. And Bitfarms had 11 sites. And we said the one that might not do it is Bitfarms. And we like Ben Gagnon. I mean, everyone likes Ben Gagnon in the space, one of the sharpest people in the mining space. And, let's see what he does in 2025. Let's give him some time to put his strategy in place. I don't think his strategy was South America. That was all done and dusted before he became CEO. He was obviously the chief mining officer, but he's not a board.
The board messed that up. I don't give Ben any credit or lack of credit for any of that. I understand, and this has been my argument from the beginning, is that the biggest risk at Bitfarms was the board. And again, a lot of people don't want to spend time on that because it's not their interest and they don't have any experience with it. But I've watched boards both make companies and destroy them. And so I'm much more sensitive to that as a risk factor than most investors, right? Again, everybody has their own thing, but here's just real quick how I view it. Like this cycle, IREN and CleanSpark are the two companies that have consistently put out targets and hit them.
Yeah.
Riot and Marathon had been most disappointing across the last 3 or 4 years. They've never hit forecasts, but all of a sudden recently they started to hit some of them.
Yeah.
I think part of that is driven. There's new horses though. There are like new people there that are outperforming, and so it's putting pressure on the old leaders to either step up or like do something else. And I think in Ryan Marathon's case, they're trying to step up. We'll see how consistent that is and how much they deliver. But I think it's been a really good competitive dynamic to have firms that like weren't considered to be real players last cycle, like IREN and CleanSpark, come out of seemingly nowhere for most people and now outperforming on a lot of the kind of forecasting, right, and the metrics that you'd expect to see.
Yeah, no, absolutely. I mean, we had our head in our hands for 18 months waiting for the Riot updates to come out monthly, and it was challenging. I mean, and we had Jason on the podcast 3 or 4 times. We finally got some of the answers from him during the podcast about why their operations have been so poor with with the batches of machines that just weren't operating as they should be. But I'm going to give them some credit. Last 3 or 4 months, like you say, they've started to perform. Marathon seem to have like one monthly good update and then 6 bad ones following it. We want consistency. So you're quite right. CleanSpark and IREN, in terms of consistency, getting their targets. If you look at before 2024, only 2 companies before that day had ever achieved their end of year target. And I think CleanSpark did it in 22, IREN did it in 23. They've both done it in 24. So not many companies, when they put out these targets, not many companies actually get there. It's a target, and they'll try hell for leather.
There's one dark horse that we haven't talked about, which is Cipher. I know they're in the news now, but I've been pretty supportive of that company this cycle, and part of that stems from just having met with all the management teams, right? I've met the management teams of pretty much all these companies, spent time with them, as you have. Over the last few years. And my takeaway from that is that from a risk standpoint, my view from the beginning of the cycle is Cipher is the lowest risk. Minor part of that comes from the management philosophy around capital allocation and shareholder returns. And part of it stems from their conservative nature of locking in low cost power. Like they got fixed cost power at Odessa, for example. So that was my baseline, like from the bottom of the cycle, and Cipher has outperformed from the very bottom. It was trading at 39 cents on December 27, 22. And at one point it hit $8, right? Like 7.99 or whatever it was. And so from the absolute bottom to now, Cipher's outperformed pretty much every other miner in the sector across the full cycle, even though the performance has been really jagged. And if you look at the chart, it's very ugly. Like, thank God I'm not a chart trader. I would never touch that stock. But what's interesting now, though, is you've got a company that went out and acquired a bunch of sites quietly, kind of following the IREN model. Not as big, right? Like their sites are smaller.
I think was it 3 or 4 sites with about 1.7 gigawatts, 500.
There's 3 options on 500 megawatt sites, and then they've got the 300 megawatt Barber Lake site, which they partially use Bitcoin to fund, and then they've got Black Pearl, which is slated to have Bitcoin mining in, but I would not be surprised if the right deal is presented, if they rip out some of the miners and or never plug them in because they just deploy it as part of this soft.
We had Tyler on the podcast, and he came back and said if he got a deal for HPC, he'd put them into Black Pearl, no, without any doubt whatsoever. He understood the model, the return, and yes, the focus on growing it from a Bitcoin mining, but if the deal came along, things could be switched around very, very quickly there.
He's a rationalist. He's not empire building for empire's sake, right? He's not doing stuff to enrich the management team alone. And so I think along with IREN and CleanSpark and a couple of others, I think the focus is correct there. And while they're smaller scale on the Bitcoin mining side, that can all change very quickly. Like they'll probably, if they don't do an HPC deal at Black Pearl, they'll probably be 35 or higher exahash by the end of the year, with like industry leading blended power and efficiency, like right up there with IREN in terms of that. They'll be smaller than IREN on Bitcoin mining, but it's possible that they leapfrog a bunch of firms.
They could have a bigger growth. They could have a bigger growth in mining.
And capacity. That could create a higher share price. And so far year to date, right after today's, we'll see where it closes today, but like it's up 27% or something year to date if you use a 464 starting price, because people use all different numbers. You see this on Twitter. People use all these numbers, and it's like it's not the real. Like Yahoo Finance is wrong a lot of the times, right? It's wrong about share count. It's wrong about returns.
Bryce, we saw something yesterday about Yahoo Finance. Do you know clarify what that was?
Yeah, just that they've been blocking all the Bitcoin crypto news, so all the news feeds for these companies, Coinbase, MicroStrategy, the miners, obviously having difficulty getting their news out on Yahoo as well.
That's great. You love to hear that, because anytime someone's working too hard to block something, it's because it's about to blow.
Yeah.
Right. And so like I love that. And people are like, oh, somebody's saying Bitcoin mining is a bad business. I'm like, where do I buy? That was literally in September. Someone asked me about that. It was the low. It was like September 5th or 6th, right? We bounced off that level and everything doubled. So I love it when these mainstream companies, the Googles, the Yahoos, whatever, try to like block crypto. Like, good luck. I mean, you're just
Probably when you were born, Mike, there was a group in the UK called Frankie Goes to Hollywood,
Okay.
and they brought out a tune called Relax, which was a big hit universally, but it wasn't a big hit to start with. It was only a big hit when the BBC blocked it because of the connotations of the actual what the song was about.
There
It
you
was a
go.
great song to sort of like listen to, dance to, but when you look at what they was talking about in the song, the BBC blocked it, and it became one of the biggest selling songs in the UK. Got to number one, went ballistic round the world, and it's like you say, as soon as someone puts a mark on something, the opposite actually happens. So hopefully, we'll see the importance of that come through.
Hey, Mike, I know we're at the hour. That absolutely flew by. We didn't get into Aquapana. We didn't get into the ultra marathon. So we'll have to have you back another time. But as someone who's obviously had a very successful career in investing, someone who's been through multiple Bitcoin cycles, I wanted to give you a chance just to kind of close off here with any words of advice or maybe things to watch out for new time or newcomers to this space.
Yeah, I mean, look, I could talk about that for hours, right? If I
We've gone out.
distill it down, though, you want to buy the highest quality companies you can. You want to buy them as early in the cycle as you can, and then you need to have some sort of strategy for risk mitigation at the end of the cycle. Because if it's anything like previous cycles, these stocks can go up a lot. Like from here, like I think some of the top names can still go up another 5, 6, 7, 8, 9, 10x potentially between now and 2026, mid 26, right? And so like that's substantial return, but usually what happens is people fly in at some point during that curve and they overinvest near the peak and then they lose a lot of money. And so people just need to be thoughtful. Like if you're at all worried about any of that, like you should stick with indexing, right? You should probably stay out of this market. This is a very challenging, very complex market. It's very volatile. It's really not for everybody. Like I have my mom in Bitcoin and my father-in-law in Bitcoin. They don't have any miners, right? Like, and even if you outperform with miners, the question is, was it worth it when you factor in the headaches, heartaches, volatility, et cetera. So people need to be thoughtful, right? Like just like you would with any investment. But I think if you choose good miners at this stage and you have some sort of exit strategy over the next year, like you'll do fine.
That's great. Well, thank you so much for the insight, for making the time. We'll be sure to have you back once again on the program. Anthony, I'll let you sign off, but Mike, appreciate the time and looking forward to visiting again.
I can only reiterate that them comments there. It's been great having you on the show. There's a lot to talk about again in the future. This is not going away, this space, for the next, like you say, year, 18 months. Look forward to the next time, Mike.
Sounds good, guys. Thanks.